What a day for equity markets. Oh man, I don't even know if the data is rigged or not. I don't know if we can say that here on YouTube, but it definitely feels like it. The data that came out this morning is sending gyrations through our markets, and I think everyone's just more confused. Nobody really knows what's going on anymore. We do have quite a bit of Tesla stock news to go over as well, but let's start off with potentially some rigged data. Non-farm payrolls for the month of May came in at 272,000. The estimate was 185,000. I didn't even think a number like that was possible. Neither did Wall Street. The unemployment rate did tick up from 3.9% to 4%. Now, how does that happen? When you see 272,000 jobs added and the unemployment rate goes up. Like, seriously, you really can't make this up. I think Wall Street is very confused about the data this morning. A majority of the jobs were added only in 3 different areas. Healthcare and social assistance added 83.5 thousand jobs. Government jobs added 43,000, and leisure and hospitality added 42,000 jobs. Global macro strategist at the Carson Group said this: as has been the case recently, job growth was driven by non-cyclical areas like healthcare and government, but cyclical areas like leisure and hospitality were strong. This is likely to keep the Fed in a holding pattern, with the first cut likely coming only in September, assuming we continue to see softer inflation. Morgan Stanley, upon this jobs report, changes their first Fed rate cut view to November from July. What makes things even stranger is when you look at May full-time employment, it actually fell 625,000 jobs, the largest drop since last December. And part-time employment in orange went up 287,000 jobs. So however you get a 200,000+ jobs report, I don't know. But nonetheless, markets are generally liking this jobs report today because that means, well, the economy is not heading into a recession, according to this jobs report, anytime soon. And in the last couple of weeks, markets have been fearful over growth and the potential for a really surprise recession. But with that said, we do have Tesla stock news to go over as well. Tesla stock slightly in the red heading into next week, where you're going to have your major event on Thursday, which is your shareholder meeting. And some of the most exciting news that we've got in a long time is actually this: Tesla has hinted at a new rider quality score and guest mode to its API, hinting at a robo-taxi future. This is the best and clearest sign that we're probably going to get heading into August 8th, that we are most likely going to get a definitive date for the start of robo-taxis. Whether that is this year, next year, 2026, I really don't think it matters because Wall Street is really not giving any value to robo-taxis to begin with. Tesla has expanded its innovative self-serve demo drive program to Canada. This program allows potential buyers to experience Tesla's vehicles in a convenient, flexible manner without the need for staff on site, which I do believe is beneficial for Tesla as well as Tesla's customers. Kathy Wood writes on X, "I'd argue that no other executive is aligned with shareholders as Elon Musk, who committed to no salary, no bonus, no stock comp for 10 years unless he created tremendous value for Tesla shareholders." And we reported on this news yesterday that Tesla has reintroduced inventory discounts for all vehicle models in the US after getting rid of them about 2 months ago. Apparently that was a mistake because Tesla has removed all of these inventory discounts. Tesla has released Copida's little ceramic cups in the US for $55 a piece. And apparently more money is being poured into solar than all other electricity generation technologies combined. A new global report has found, with power sector investment in photovoltaic technology projected to exceed $500 billion in 2024. Tesla has released a software upgrade for its in-car navigation system in China on Friday, introducing new features such as displaying lane markings on its maps that correspond to the actual lanes on the road. EVs have passed a key measure of price parity in the US. Tesla, Hyundai, Kia, and GM now offer EVs with more than 300 miles of range for less than the average cost of a new vehicle sold in the US, according to an analysis by Bloomberg. Unplugged Tesla is introducing the world's first Tesla Cybertruck patrol vehicle for public safety officials, with deliveries starting as early as late 2024. Bloomberg Law wrote an opinion piece on Elon Musk's comp package. Now, here's one of the quotes. Quote, "It would be strange to conclude that a majority of Tesla stockholders, including some very large and sophisticated institutions, lack ordinary sound business judgment on the question of how much Musk's pay should be." Davil Shroff, he works at Tesla's Autopilot AI division. He says, quote, "Elon Musk, he's created tremendous value in the opportunities to learn, grow, and experiment in this field, in addition to the satisfaction of shipping incredible tech to so many happy Tesla customers worldwide." Here on the day today, sentiment is very bullish for Tesla over on StockTwits, coming in at 75. Yesterday, sentiment was bearish at 39. Today, message volume is a little bit lower at 53. Yesterday, it was high at 55. And today, the participation ratio, in line with where we have been in recent weeks, is high at 55. In the options market today, specifically big money, well, they're pretty positive in their option orders so far. You have seen 5 orders totaling $576.7 thousand, with a positive order value of 100%. You are seeing a lot of short-term call options that are being placed on Tesla stock. A lot of these for June 14th, around the 180 calls. You have a July 12th $200 call here. That trade worth $100,000. Both of these trades worth about $120,000 a piece. Not seeing a lot of those deep in the money put options. It seems like a lot of hedge funds and institutions that wanted to go out and hedge their position, they've probably done that already. Tesla currently and still has a multi-year high short position at 3.78% short interest of free float, $18.65 billion currently in short positions, with still about 105 million shares that are currently sold short. Over on Google Trends, you can see trend activity is still pretty strong for the Tesla lineup. Cybertruck at 69, the Model Y at 29, the Model 3 at 22, the Model S at 11, and the Model X at 8. I'm interested to see if the Model 3 search trends do start to rise, since Tesla is offering a buy down of the interest rate down to about 2% on Model 3s for the next 10 days or so. Which, buying down the interest rate seems like a lot more of an effective strategy to actually boosting orders than outright cutting prices. And Google Trends data for full self-driving here in the US still looks pretty strong at 21, which you were trending in the low to mid-teens for basically many years, and that did shoot up to 100 clearly as everyone got the free trial. It's still back to 21, which is higher than any point previously you had been at in the last 12 months. The probability for the first Fed rate cut coming July 31st is falling a lot today, from 20% yesterday down to 8.1% today. There is now almost a 92% chance of no action by the Fed coming by July 31st. And September is up in the air. What could happen here? You are looking at odds of 46.6% that we will get a cut, and 49.5% that we will get a continued pause. So right now, the markets are still pricing in the first cut coming November 7th, the day after the presidential election. And today is still a pretty rough day for overall markets. About 3% of all stocks are falling under their 50-day moving average, and you now only have 44% of stocks that are above their 50-day moving average. Compare this to about mid-May, where almost 62% of stocks were above their 50-day moving average. So even though indexes continue to chug along, hit new all-time highs on a almost week-by-week basis, the average stock is doing very bad. Tesla's global inventory numbers have recently shot up for the Model S and the Model X. The Model 3 has been falling, and the Model Y has also been falling. Your latest AI investor sentiment survey shows the amount of investors that are bullish is 39%, the amount of neutral investors is 29%, and the amount of bearish investors is hitting a new high we have not seen in the last couple of months and higher than historical, averages at 32%. The historical average is 31%, and you were as low as 23.3% of investors that were bearish back right at about mid-May. Here on the day today, like I said, the indexes are doing a little bit better. Some of that could be contributed to Nvidia, that is up 0.25%. Other big tech names that are doing well. Bonds are getting absolutely washed out today. It is a really bad day for the bond market, just to say the least. 10-year treasury yields are up 14 basis points. That's pretty rough. And in that context, it's actually surprising that Tesla is not down a lot more. I mean, Tesla's pretty much unchanged for the day. And you just basically got half of a rate hike from the Fed today. That's pretty impressive overall. Now, as I have said previously, and I will continue to say, I mean, you're not going to do much heading into June 13th, right? You're going to be in between this 50-day and the 100-day moving average, anywhere from 180 on the high side to 172 on the low side. And I said that heading into this week, and you have not broken under the 50-day moving average, and you have not broken above the 100-day moving average. It was really a volatile week, but nothing happened in the grand scope of things. You did not get one steady move higher or one steady move lower, and that's kind of what I'm expecting heading into June 13th. Now, in the next video, I will talk about my direct expectations for June 13th and what that could do to Tesla stock. So stay tuned to the channel for the next video. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.